Crypto exchange FTX on the verge of collapse after Binance backed out of its plans to acquire Sam Bankman-Fried's struggling company. According to people familiar with the matter, Bankman-Fried told investors that FTX is facing a shortfall of up to $8 billion from withdrawal requests and needs emergency funding. Reports say the SEC is investigating FTX. And right now we want to bring in the chairman of the SEC, Gary Gensler. Good morning to you, Gary. Thank you for joining us.
Andrew.
Lots of questions this morning for you about what is happening. And so let's just start with what do you know and what are you investigating?
Andrew, as you can imagine, and your viewers know that I can't speak about any possible investigations, but let's step back and say what's happening here. And it's really as old as finance and as antiquity. When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside, these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then when markets turned on them, it appears that a lot of customers lost money, and that's where our mission is about those customers.
Well, let's talk about that, Gary, because critics would say, look, you have been talking about the need for regulating and yet have not. There's been lots of focus. We had you on last time when you went after Kim Kardashian. But on a relative basis, going after Kim Kardashian compared to what is now a massive undoing of FTX isn't enough. What do you say about that?
Look, I think that investors need better protection in this space. But I would say this is a field that's significantly non-compliant, but it's got regulation, and those regulations are often very clear. And we have multiple paths. And one path is working with those crypto exchanges, crypto lending platforms, and to get them properly registered. And why that matters is that's so the public's protected. But we have another path, which is enforcement. We've brought, between my predecessor and the teams now at the SEC, at least 100 actions in this case. And we've been very clear in these various enforcement actions. And we had a big win even this week on a crypto token called Library, where a court clearly said, you've been on fair notice. And yes, this is a securities under the securities law.
But Gary, in fairness, there are millions, if not billions of dollars that are going to get tied up that potentially will get lost in this situation by investors, not just retail investors, but pensions that have given money to venture capitalists that have invested in these things. Shouldn't this be more regulated?
Yes, Andrew, and the laws are clear. And look, the runway is running out. I mean, the American public and investors around the globe are getting hurt by a field that says they put a lot of fancy talk around it, Andrew, and the technology is interesting. And I taught it at MIT, and I think that there is some innovations here, but we still need investor protection. And so what I would say is come in and talk to us. You've heard that before. The runway is getting shorter, and the laws are clear, and it's pretty rich for me when I think about it. Look, there's also celebrities. You talked about celebrities. There's celebrity CEOs in this space as well, celebrity crypto entrepreneurs. And so the public can fall prey to their promotions, their marketing, and the like. And it's really important our third path is also investor education. Going on a show like this is also to say to the public, beware, this is highly speculative. It is regulated, but without prejudging anyone's circumstance, largely non-compliant.
Gary, you said people should come in, if you will. Sam Bankman-Fried, it appears from your calendar, on March 29th, 2022, at 4 p.m., came in and actually met with you, along with Brad Katsuyama of IEX, someone who has draped himself in the flag, if you will, of an honorable exchange. Do you feel like you were hoodwinked?
I think we've been clear in these meetings, and you can look at my calendar's public, many meetings with folks in this industry. Very clear in these meetings, same message to the public, same message to them, that non-compliance is not going to work. The public's going to be hurt, but also we're going to continue on these dual paths.
In huge ways, and there's real money that's at play here and real investors who are potentially getting defrauded on this stuff. Is it illegal when you look into this?
I couldn't agree with you more. There's 10,000 plus tokens, and there's as many as 1,000 coming on every month to quarter. And so many of them have very thin trading, and the purported values, and I say purported values, might be only on very few trades, and then others are sitting with large buckets of these tokens. And we, saw this happen with the Terra Luna tokens earlier this year, and there was a token in the middle of this as well. What was its value? Where there are only a few holders of it? What was making those values? Secondly, you said disclosure. In our securities laws, if you come to a merger agreement, even a letter of intent, there has to be full and fair and truthful disclosure.
Let me ask you another question, Gary, which actually relates to Tether and stablecoins. Tether's now under $1 and your predecessor, Jay Clayton, has called for regulation on stablecoins. I raise the question because here we are again. Don't we need to know whether a bank deposit is actually a bank deposit or whether it's a money market at this point?
Look, I've said this for some time. The so-called purported stable coins, if they're not that stable, or if they pay a yield, a reward, an interest directly or indirectly, those are indications that the public is anticipating profits and that these could be securities under the securities laws. But I think that the public has seen that these are very much like a money market funds. And as you say, they sometimes don't trade at par. And we don't have the proper disclosure, again, behind what stands behind those claims.
But Gary, what do you say to the critics who say this is happening on your watch? You are the cop on the beat. You've tried to claim jurisdiction for this arena, as there's been, as you know, a battle between the SEC and the CFTC over who's in charge.
For part of it, I think that, and I was honored to chair the Commodity Futures Trading Commission. I think very highly. There's part of this market, non-security crypto tokens. I think it's small in number of tokens. It might be significant in size of market cap. So I think there's work for both of us market regulators, as well as other regulators around anti-money laundering and sanctions. I mean, this field really needs to come into compliance. And in terms of our efforts of the SEC, I can't be prouder of the staff of the SEC, but we too have limited resources. We have a $100 trillion capital market to oversee. And that $100 trillion capital markets, the stock market, the bond markets, treasuries, and the like, that's an important responsibility. And we don't want to undermine that in this relatively new market.
But what's the public supposed to think when we have a company that was worth literally $32 billion with some of the biggest venture capital firms out there, by the way, supported by pension funds in large part, teachers, firemen, and the like, investing in a company that, by the way, didn't have a CFO?
Look, I think it's pretty clear, Andrew, and we're going to do what Congress and the American public expect. We're going to be clear in our voice about the risk, the speculative risk in what is appears to be largely non-compliant actors. We're going to continue to be working with the industry to try to get them properly registered, but also that cop on the beat. These things take time, and you would want them to take time so that we build the facts out. But I would say the runway is getting shorter.
If you're a crypto investor today, how much confidence should you have in the system?
I would say to the American public, be careful, beware. There's still a lot of non-compliance, and when you give somebody your token and they go down, you're going to just stand in line at a bankruptcy court, and they may be taking your token and doing all sorts of things without proper disclosure. Now, if it's one-to-one backed and there's really good disclosure and you're protected against fraud, manipulation, that's all we're saying. That's what the securities laws are. There is a path forward to these intermediaries.
But for Americans who have money on an exchange like a Coinbase, which is based in the U.S. publicly traded company, also under your jurisdiction, or a Binance, the two biggest ones at this point that are remaining, should they feel confident that they can get their money out of those firms?
I'm not going to speak to any one platform, but I would say that you have risk. The rules and the laws are clear, but do not assume that these firms are complying with the rules and the laws that the New York Stock Exchange or the biggest brokerage apps are complying with.
Gary Gensler, we appreciate you coming on, especially during what has turned out to be quite a drama and crisis. We will continue to keep our eyes on the story, and we hope to talk to you again very, very soon as this continues to play out. And
Thank you, Andrew Becky.
Thank you so much.